Boom! What's going on, guys? Michael here, 360 Digital Closing Bell. We are kind of live on YouTube from an undisclosed location here in Denver, Colorado, here on this gorgeous Wednesday, October 7th, 2020. Like I mentioned, I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, and fan of unions, Stuart Turley.
Hey, anybody with a job. It's a beautiful day in the neighborhood and glad to be here.
No, it's a great day. We're coming to you on this really hot Denver Wednesday, October 7th. We got a lot of stuff to cover. DOE Crude Inventory Numbers come out a little bearish. Trump tweets again, and holy smokes, it's the exact opposite of what we heard today. So the equities markets were pricing all of that. Stu's got still some wild stuff coming down from Norway along the strike. And Saudi Aramco dives in with all the super majors and gives their update on what they're going to do on their ESG plans. It'll be very interesting to see what Stu has on that. And these guys will, again, cover the equities market. But first, guys, just subscribe. 360 Digital Closing Bell. You can check us out on the world's greatest website, oilandgas360.com, iTunes, Spotify, YouTube, the best way to stay up to date on all of your energy market news. As we roll into the markets today, Trump tweets up a storm and again moves the market, but this time in the opposite direction, said major industries really flying after he tweeted two things. And I just, the only way to do is just go ahead and read them. The House and Senate should immediately approve $25 billion for airline payroll support. That sent airline stocks flying, and $135 billion for the payment protection program for all small businesses. Both of these funds will be paid for by the unused funds from the CARES Act. I have this money. I will sign now. Tweet number 2, if I will send a standalone bill, if I am sent, a standalone bill for stimulus checks, $1,200, somebody outside my house is dying. People are flying by in the cop cars. They're hearing about their stimulus checks that are coming in. Everyone's trying to cash in because if Trump is sent that bill, guess what? $1,200 are going to go immediately out. He tags Mark Meadows, Nancy Pelosi, Kevin McCarthy, Chuck Schumer, all of the leadership in both the House and the Senate to get this done immediately. So markets loved that as per usual. SPY was up about 1.8 percentage points. Nasdaq is about 2%. Dow Jones loved it the best. They're trading about 2 percentage points up as we're coming to you a little bit here before the market closes. Crude oil did not like that, and we're going to cover the crazy dynamics of what's going on in the crude oil market. Really what drove the market today, currently trading about $40 for oil, down about 1.5% or 1.6 percentage points, slightly bearish. EIA information, we were expecting some draws in terms of crude based on the API, but we saw actually about a 500,000 barrel build over at Cushing, over in total U.S. supply. So that's really what drove markets down. That didn't help the back end of the curve as well. It's about 1.75 percentage points. Back end of the curve trading now 42.31. Natural gas, it continues to spike up 4.2 percentage points off the back of just some really changing international demand dynamics. Currently $2.62. That's about a 10-cent rise. 12-month strip does about 1%, or about 2 percentage points, $3.12. XOP, which are E&P securities contract, had itself a great day, up 3.06 percentage points. OH, which are oilfield services, finishes about 1.5 percentage points up, or about 1.3 percentage points. Why did the XOP contract spike? Well, specifically because of that first tweet I read, guys. What was it? $135 billion for the payment protection program for small businesses. That went to a lot of E&P companies. A lot of small E&P companies were heavy buyers of the payment protection program. And why not? The oil business got hit absolutely hard. Now, it was kind of funny. There's a lot of private equity companies, specifically in the shale business, that took PPE money. And that's a whole nother ethics conversation we can have later. Private equity company taking CARES money. But if you're a small, publicly or privately funded, and not privately backed, but if you're a small public company, taking a payment protection program is exactly what you need. That's what sent E&P securities up, driving high. We're going to cover some crazy numbers. As I mentioned, oilfield services like that as well, trading about 1.5 percentage points up. On the downside, there's still some things. Arch Resources down about 4.5 percentage points, lost some money there, 42.92. Lone Star Resources going through Chapter 11 bankruptcy, still listed though. They're down about 5.7 percentage points, down to 26 cents. And U.S. Energy Corporation down about 6.5 percentage points, $5.02. On the upside though, Stu, for some big numbers. And all these big numbers, what are they? They're natural gas players. Talos Energy, well, they're offshore. Antero Resources, they're up 10%. Natural gas player. Range Resources up 11.6 percentage points. Natural gas player. Goodrich Petroleum, we love them guys over there. Up 12 percentage points today. Oh, man. Rob Turnill's having some drinks tonight. $6 or $9.06. They're, again, up 12.4 percentage points. American Resources Corporation. Man, does it get more American than that? Up 55 percentage points. I don't know. I have to look into what even is that and why that even happened. So I'm not even sure if we'll call that the biggest move of the day, but really what we see, natural gas players, people, big moves. Why? Natural gas outlook is looking extremely good as we move into that 12-month strip. Stu, what do we have in the international news desk today?
Oh, hey, Michael. I got a couple things here. The Norway strike is still going on. They've added another
Seriously,
90.
it's still going on.
Still going on. They didn't listen to our show yesterday, and it's now still about 8% of their total production. However, they're looking to extend it out, and it's now another 1,000. It's going to be 1,000 offshore members.
It's really what sent natural gas prices flying. Offshore Norway is a huge natural gas and LNG production term. I mean, like I said, you're up 4.5 percentage points on natty gas. I mean, this is the reason why. Stu, you were on this on Monday. It's been great seeing you cover it.
Oh, thank you. I'll pay you later. Hey, the other one is Saudi Aramco. I really like the guys over at Saudi Aramco. They're a lot of fun. One of the key things in this article, Sole Survivor, Saudi Aramco doubles down on outcast rivals. I put seems logical. And here's why. You have
what are they doing? I guess you got to give me that. What are they? They came out, didn't they come out and have some big new announcement on where they're standing on this whole ESG utilities standpoint?
Yes. And that is they produce their oil at $4 a barrel. They have 20%. I'm just giving you some numbers. Numbers are good. 20% of the world's proven reserves. Well, okay, here's $4 production of oil. That means they could go down considerably. They could go to $20 a barrel and sit there and still bring money into the crowd.
That's wild.
That is absolutely cool.
$4 break even point.
Let me give you a little bit of another nugget that was in this article, and that is they have the cleanest oil in the world. They also have reduced their carbon dioxide output as well by scrubbing their oil. So you can sit here and say they're bad people because they're oil. No, they're smart. They're taking care of reducing the pollution product that they have.
And it really goes, and it really, as I think you mentioned in your Oil and Gas 360 publishers note, it really, as you mentioned, it stands alone. They're pivoting from a lot of what these other super majors and international oil companies are doing.
Oh, absolutely. Let me get my crayon here. Okay, here we go. Here are the super majors. Okay. They're going to the left. Here is Saudi Aramco over here. Okay. Saudi Aramco is staying in oil because it's going to take them 50 years to make the turn, but they're also investing in it. These guys over here, okay, these guys, they're gone. They are totally renewable. Chevron's the only one that is kind of hanging in there, and you got another story on Chevron, if I believe.
Yeah, interesting. I don't even know what biomethane is, so we'll have to get into that. It's been a busy week on the news desk so far, and really a lot of these international stories, specifically these Norway ones, have been moving markets. Anything else on the international side?
No, we got more coming. We got 3 more peace deals coming.
Yeah, we're waiting on those. You've been on that like as my dad would say, a fly on manure. When we move over into the U.S. shale oil patch, a couple things that really move markets today. One, in terms of crude oil, DOE inventory numbers come out and are slightly bearish. We were expecting a little bit of a draw from crude oil inventories. Instead, it's about a 500,000 barrel increase in the number of commercial crude oil inventories. That's excluding the SPR. 492 million and 400,000. So again, that's up from what it was 492 and 0.9. Last week it was 0.4. The other thing was interesting, 300,000 barrels of crude oil production comes back online. So we are at about 11 million barrels on crude oil production. But remember, guys, that's a rolling week behind. So we've got this whole Hurricane Delta stuff. So refinery utilization was actually good. We saw it up in the low 74s for all of the different pads. New York even, that East Coast pad even was able to spike up above 73, which was really, really good to see. Yeah, what's crazy is prices today, as I mentioned, dropped 1.5 percentage points off the back of this DOE inventory report, mostly because of the number that I read. We were expecting a draw in crude oil inventories, but we saw a rise. And so that's obviously going to flip the algos. What just boggles my mind, Stu, and this is where the changing U.S. oil dynamics gets into, and you really have to, as we love to talk oil trading on this show, don't do it unless you really know what you're doing, because the articles that dropped this morning, if you're not waiting for EIA, is 80% of the U.S. Gulf Mexico production, Stu, was offline as of late October 7th due to Hurricane Delta. If this was 4 years ago, oil markets, the front end of the contract would be up 5-6 percentage points. We would see depending on the levels where we are now, we would see a $2 to $3 increase in the price of oil, just because oil is a supply and demand commodity. The price is how much supply versus how much demand is out there. We're taking away 80% of U.S. Gulf production, which is 1.2, it's like 1.8 or 1.7 million barrels of U.S. oil production. No, excuse me, 1.49. They did that. I was trying to do the math in my head. I was a little off. They've got it here on the page. We do our math on napkins here, people, so cut me some slack. 1.49 million barrels of crude oil production taken offline. Oil drops 1.5 percentage points. I said yesterday, because of Trump's tweeting about the markets, and I'll say it again, we're living in a twilight zone with the way some of these markets are moving. We've got 80% of Gulf production online, oil drops. Trump's tweets, markets go crazy. Wish I would have been on the right side of that one, though. I will take my $1,200 check, though. Tech stocks love that, because you remember the last round of $1,200 checks, everyone pretty much just bought Amazon and Netflix, which makes sort of sense. The other story that we have is actually a joint venture. We're talking about these super majors sort of divesting or moving away from fossil fuels. Chevron actually inks a biomethane agreement with Brightmark joint venture. So I got to be honest with you. You sent me this story. I got no clue what biomethane is. You're going to have to educate me.
Well, it's part of the Green New Deal, and we always hear in politics.
That's why I haven't heard about it.
Yeah, that's why biomethane is actually from cows. And so AOC is very, very happy about this. And Chevron is part of another renewable that announced its first successful production from dairy farms in Kern County last month. So they are actually going to be running these in LNG cars. So they're going to be taking cow stuff and putting it into cars. Pretty exciting. But Chevron is one of the lowest super majors to do any of this. So, but I like the story. It was kind of cool. They're doing renewable natural gas.
Yeah, and so we had I always talk about on the long form podcast, Inside Baseball, but I'll give a little viewers some Inside Baseball. We had an internal lunch and learn at Entercom about renewable natural gas. It's kind of funny. You talk biomethane, it's cow poop, but I mean, there's meat on that bone, pun intended. Pun intended. But I mean, I think do I think we're going to be living off renewable natural gas? No, I don't think that's quite what. But the way you can extract some of this stuff from landfills, it's really cool. I'm not saying it's gonna. I'm not saying all of a sudden we're gonna, Tesla's all of a sudden gonna start using renewable natural gas, but it'll be pretty interesting. But we'll be over all of that, as especially as we see these super majors. I'd be remiss if I didn't just say everybody in Louisiana, hearts and prayers are with you guys. Hurricane Delta is expected right now to land as a Category 3. Currently, it's a Category 4. Expected to make landfall in Louisiana October 9th. About roughly 1.49 million barrels will be offline. What a lot of the big expectation is, the refinery impact's going to be lit. So what's going to happen as we move towards next week into, what crude oil could be. I mean, it's going to be a news-driven event. It's going to be interesting to see what refineries end up getting knocked online, how much natural gas production gets offline. So it's just been a pretty wild week, Stu. We missing anything for the day?
I don't think so. It's been a rough day.
It's been a rough day, but we were able to launch our Women in Energy podcast with Entercom. You should go check that out on the world's greatest website, oilandgas360.com. Chairman and CFO, our boss, Blanca Andrews, interviews Laura Prang, an executive search member over at Prang & Associates. We love those guys. Finally got the boss doing a podcast. Took her a while.
Yeah, we got more coming with her, though.
We got a lot more coming.
Our dashboards, Michael. Dashboard, dashboard, dashboard.
You're right. Go check out. Go to the homepage, oilandgas360.com. Go to the main tab, drop down dashboards. Check out all of our data. We're going to be rolling out so much more free, but also go behind the paywall. Become a subscriber. It's like $60 a month. I promise you, it's the best $60 a month you'll spend. Access to all different data. You're going to have access to be able to email me specifically. I'll answer all your questions, get you whatever data you need. I mean, it's literally, you're paying $60 a month for your own analyst. I mean, you should do that now. You're losing money not purchasing right now. I promise you. Go to the website and do that. And with that, we're going to go ahead and let you guys get out of here, get back to work. Thank you for checking out the 360 Digital Closing Bell Daily Energy Markets. I mean, gorgeous Wednesday, October 7th, 2020. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow for the Digital Ticker.